Good afternoon, everybody. Lock the doors. We have reached the allotted time for the Bremworth 2025 Annual General Meeting for all the shareholders. Tēnā koutou katoa. My name's Rob Hewitt and I have the privilege of being the chair of this company. Today's meeting is being held obviously in person but also online. There's a camera up there behind you through Computershare's meeting platform. I'm welcoming all of you here in person today and to those of you who have joined us online as well. Today's meeting is notable for a number of reasons. It's the first Bremworth annual meeting for all of your directors at the table today and for our Chief Executive Officer, Craig, who I'll introduce all of them in a minute. This meeting is also the first annual meeting to be held here at the company's premises, and we'll hope that after the conclusion of this, you'll be able to join management for a tour of the facilities to see carpet being made after the meeting. I'd like to introduce and acknowledge some people in the room. Firstly, our auditor from PwC, Pip Cameron, good to see you. Our legal advisors, they've all turned out today. We've got Ian, Joe and Brittany here from Russell McVeigh. We have also got our corporate financial advisors, Toby Grosser and team from Montan. So thank you, good to have you all here. Before I go any further, there's just a few administrative matters that I need to cover off. If there's an emergency, head for the nearest exit. Follow the people in the... Where are the people in the yellow jackets? They know where to go. They will guide you to the designated assembly point. There are no yellow jackets. Head out the door and go to the car park. Thank you. If you do need the toilets, they're out the doors and just on your right. Anyway, there will be, it says in my notes here, one of the Bremworth staff outside will be able to assist you. I don't think that's clear. They will be able to direct you. We're pleased to be able to share our progress today and to outline the next stage of the Bremworth journey. So what we're going to do now, over the next little while, there'll be presentations from myself and from Craig as our CEO, and then there's going to be opportunities for shareholders to ask questions and have a general discussion about the business performance. We've got 5 resolutions that we need to deal with today, as notified in the notice of meeting. That was circulated to you all on the 13th of October, and I intend to take all of those as read. The audited financial statements and the annual report for the year ended 30 June 2025 were also released to the NZX and the shareholders on the 7th of October. I'm delighted to declare that we do have a quorum here. We need 5 of you to turn up. It looks like we've got a couple more than that, and the meeting has duly been convened. I'd also like to note, Riley, good to see you. We've got at least one representative from the media here today. So bear that in mind when you're asking your questions, but good to have you here. After those presentations that I referred to earlier, there's going to be another session. Undoubtedly and ongoingly, there's been significant interest from shareholders around our proposed scheme of arrangement with Floorscape Mohawk that was announced to the market on the 2nd of October. And I appreciate that some shareholders may not wish to raise their questions during the annual meeting itself. In fact, it would be great if you didn't, because we are going to invite you all as shareholders to have those questions asked and answered after the conclusion of the annual meeting. And we offer the opportunity to discuss the proposal with the directors and our advisors. Because this session is solely for the benefit of shareholders and intended to allow you to raise your question freely with the directors, I'm respectfully requesting that all non-shareholders and media, whether you're in person or online, bugger off at that stage. So we'll do the AGM. Happy to have you here, Riley. Answer any questions that you've got, but then when we move into the scheme of arrangement discussions, we'll ask you to shoot off at that stage. If you have a question during the meeting, please raise your hand and I'll ask for one of the roving microphones to come around to you. What would be great is if you could identify yourself before asking the question. That'd be great. For media, we'll hold your questions till the end and we can have a quick session after the conclusion. Voting today will be conducted by way of a poll. So 1 share, 1 vote. If you are eligible to vote, you will be able to cast your vote using the voting paper accompanying the notice of meeting. that was handed to you on arrival. So you select your voting direction from the options that are shown on the voting paper when voting opens later in the meeting. For those of you that are online, select the Q&A tab, and I think you've got the instruction. Yes, there it is. Select the Q&A tab to submit your questions and the vote tab to cast your votes, if you're eligible to do so. Please feel free to submit questions throughout the meeting and they will be addressed at the relevant time. So there's a screen for you to put your questions in, and then I will be calling for any questions periodically from Padgett, who will tell me, wave your hands around, Padgett, if anything comes up. You can vote on all the resolutions at once or by each resolution in turn. You can change your vote up until I declare voting is closed later in the meeting. I now declare voting open for all the resolutions, and I will give you notice when the voting is closed. The board. Joining me today are your directors. I'll ask them each to raise their hand, although you can see the names in front of them here. So first of all, Julie Bonin, Trevor Burt, and Murray Dyer. And down the far end there is the guy that's been around here longer than all of us, Grant Beale, who's the co-founder and of the Bremworth business and a director emeritus. So welcome. Your board brings wide experience, and of course, myself, I should have said that. Yeah, I'm part of this crew too. Your board brings wide experience across agribusiness, manufacturing, retail, and corporate governance. It has refreshed the mix of skills around the table, combining a continuity of manufacturing and design knowledge with new perspectives in governance, capital markets, and strategy. Our approach is hands-on. It's had to be. Directors are spending significant time in the plants and with customers to ensure that we fully understand the challenges and the opportunities that are facing Bremworth. Also joining us is our CEO, Craig Woolford, and other members of Craig's executive leadership team, and as I've said before, several of our advisors and our auditors. On behalf of the board, I thank all who have provided professional guidance to Bremworth throughout the year. So with that, I turn to the Chair's presentation. When this board took office in March, shareholders asked us to act decisively to establish the business, to stabilise the business and protect its value. We've done exactly that. We've reinstated the wool yarn production in Napier. We've reintroduced solution-dyed nylon carpet to ensure a relevant product portfolio and that Bremworth remains relevant to the largest segment of the market. We continue to right-size the cost base and focus resources where they will deliver the greatest return. We also continued with the strategic review process that had been initiated by the previous board to assess the best way to create long-term value for shareholders. It's been a pretty busy 8 months. The outcome of that strategic review is the proposed scheme of arrangement with Floorscape Limited, a wholly owned subsidiary of Mohawk Industries. This transaction is the result of a structured process involving multiple parties and represents all of the options available, including continuing as a going concern, and represents of all the options available, including as a going concern, what your board believes to be the best outcome for shareholders, as we see it today. Under the scheme, shareholders are expected to receive total consideration of between $1.05 and $1.15 per share. That includes 75 cents per share from Floorscape and an additional 30 to 40 cents per share from excess cash to be returned to shareholders. Regulatory approvals are progressing well. The ACCC, Australian Competition and Consumer Commission, has already approved the transaction in their jurisdiction. Applications are with the New Zealand Commerce Commission currently and Inland Revenue. Subject to these and shareholder approval, the transaction is expected to be implemented in the second half of financial year 2026. So that's first half calendar year next year. This proposal provides certainty of value while preserving the Bremworth brand and workforce. It aligns us with a global parent that brings scale, investment capability and access to new markets. Whether the scheme proceeds or not, our strategy remains focused on building a stronger, more balanced business. We will continue to concentrate on the things that matter the most: disciplined manufacturing, profitable product mix, a high-performing sales culture and capital efficiency. These are fundamentals that will sustain the value creation for shareholders in any ownership structure. As I mentioned earlier, shareholders will have the opportunities to meet and chat with directors in private after the conclusion of the annual meeting to further discuss the proposed scheme. Market context. It's important to recognise the environment in which this turnaround has taken place. Consumer confidence and housing activity have remained subdued here in New Zealand, yet we've managed to lift volumes, rebuild service reliability, and begin the process of regaining trust with key retail partners. It speaks to the strength of our brand and the determination of our people. There's also quite a long way to go. The reinstatement of the Napier yarn plant is well advanced, with production quality now meeting our standards and supporting our SKU delivery. We have one card operational over there. The second card is undergoing testing at the moment and will be operational next week. So we're making yarn. This reinstatement is the foundation to unlock the shortening of the supply chain, a reduction in our inventory hold, the improvement of yarn quality and consistency, improved cost efficiency, and ultimately sales growth. This has already seen the additional employment of in excess of 20 staff in Napier as we rebuild the blending operation, the carding lines that were damaged in Cyclone Gabrielle. We reinstate the 2-for-1 twister and operationalise the confin line to produce high quality, consistent yarn in New Zealand. This has also had the benefit of bringing virtually all yarn production back in-house, with commensurate savings on inventory holding and a significant reduction in supply chain length and time to service, with the added significant benefit of being a remarkable quality improvement in the yarn produced. Quality has returned to historical levels, with downgrade rates now below long-term averages. It's a major improvement compared to the 12% plus that we saw earlier in the year, which is simply not acceptable. Re-entry into the SDN carpet market is virtually complete. We've now got stock on hand, and you might see some this afternoon, and we expect to see sales begin this month. The demand pipeline is well supported by ongoing yarn supply from our partners. The addition of SDN to Bremworth's product portfolio provides us with greater relevance to our retail partners and ultimately our consumers, as we have a wider range of consumer relevant products to offer in our range. Alignment of the cost base is also nearly complete. We are seeing efficiencies in the distribution and administration parts of our business, and we are beginning to benefit from lower overheads across the business. Sales capability is being rebuilt. Great to see you here, Warren, today. He's the dude that leads New Zealand. You don't mind me calling you that, do you, Warren? Warren the dude. Sales capability has been rebuilt. Almost all of their frontline positions are filled, and we are seeing encouraging momentum, particularly in New Zealand. So looking ahead, as our volumes increase, we are shifting our focus progressively from recovery to efficiency. Manufacturing performance is improving as we concentrate on throughput and process optimisation. Napier continues to increase its output and support the Whanganui plant, reducing our lead times and improving quality. We are lifting the volumes from our yarn plant and managing inventory to focus on faster moving SKUs while phasing out slower moving ones to maintain an optimal stock balance. Our cash position remains strong, with the cash at the end of the financial year of $42.2 million in the bank, as reported in the annual report. Our sustainability principles remain unchanged. Bremworth continues to champion the environmental and health benefits of natural fibres, and we will maintain that leadership position whatever the outcome of the scheme. We are comfortable as a board that SDN and wool can coexist under the Bremworth brand. Our customers are asking for this. All of this means that we've built a platform capable of sustained performance and ultimately sustained profitability, whether the scheme proceeds or not. It is fair to say that the future is murky at the moment, so it is a long road to go, and we'll talk more about that later on. Employee recognition. I also want to recognise the contribution of our staff throughout New Zealand and Australia across both the carpet and our wool divisions. They've shown professionalism throughout significant change, and their commitment to quality and safety underpins everything that we're achieving. So on behalf of the board, I thank them. So in closing, We are in the process of rebuilding focus, capability and financial discipline, and we're a long way down the track, but there's still more to do. The last few months have proven that Bremworth can adapt, compete and ultimately win. The foundations are set, there's a long way to go, and we're ready for the next phase of growth and value creation for shareholders. Thank you for your continued trust. I will now invite Craig to provide further detail on the company's operations and the outlook for the rest of 26 and 27. So Craig, over to you.
All right, thank you, Rob. Good afternoon, everyone. It's a privilege to stand here today and once again be part of Bremworth's journey. The company has played a major role in my professional life and is one that I care deeply about. I've seen firsthand what Bremworth can achieve when its people are focused, its manufacturing runs well and its customers believe in the brand. This isn't my first experience at Bremworth. I started here back in 1997 as the Manufacturing Administration Manager. I worked through several leadership roles, including production manager, plant manager, and then moved on to general manager of manufacturing. I did a brief stint in Australia as acting CEO for one of our parent company, or one of our other companies, Onterra Tiles. And then I, after a period leading Godfrey Hirst North America, I returned here earlier this year at the board's request to help get the company back on track. When I came back, it was clear the business had strong fundamentals but needed sharper focus. The past 6 months have been about restoring discipline, resizing the business, improving quality and embedding a performance culture that drives profitability and growth. A major focus this year has been resetting how people see Bremworth. For too long, the business saw itself as just a manufacturing company. That mindset needed to change. We are a sales organisation that happens to make carpet, not the other way around. Everything we do is to support sales. And the team right across the organisation have embraced this shift and the results are starting to show. As Rob mentioned, we've launched new synthetic ranges alongside our wool offer, giving us a fuller product mix that the retailers want. This has changed the conversation with customers and re-established our relevance in the market in both New Zealand and Australia. Before turning to operations, I want to briefly recap on our FY25 results. The past year was the most challenging in Bremworth's modern history. Consumer confidence remained weak across New Zealand and Australia, and competition in the flooring market intensified. These factors weighed heavily on both volumes and margins, particularly through the first half of the year. Despite these challenges, revenue increased to 88.4 million, up from 80.3 million in FY24, reflecting the reinstatement of production capacity and the gradual rebuilding of customer relationships, as well as a solid performance by our wool procurement division, Elco Direct. However, margins were compressed as higher input costs and subdued demand reduced overall profitability. A normalised EBITDA loss came in at 13.5 million, compared with a 4.7 million loss over the previous year. Despite this, the company recorded a net profit after tax of 19.1 million, compared with 4.6 million in FY24, after adjusting for insurance proceeds, restructuring costs and provision for onerous contract. Most of the operating loss occurred in the first half when we were carrying excess inventory, facing higher yarn costs and managing the disruption of reinstating Napier. The second half showed a clear improvement as cost control measures took hold, manufacturing began to stabilise and working capital was brought back under tight management. While the full year does not yet reflect the company's potential, the trajectory is positive. We exited FY25 with a leaner cost base, better quality metrics and improved cash generation. The reset has created a stronger platform for the recovery we expect to see through FY26 and beyond. So our manufacturing network is performing more efficiently than at any point in the recent years. Productivity gains are coming through the volumes lift, with Napier and Whanganui now operating in close coordination. The two sites are now sharing load more effectively, reducing lead times and improving quality consistency across the range. We've rebalanced the production mix to focus on high-margin SKUs and tighten control over energy and waste. Continuous improvement initiatives are underway across both yarn and tufting operations, with clear accountability for output, cost and quality. The progress has been tangible. When I returned to the business, the cost of quality was unsustainable, with downgrades running at 12% of production. Today, those downgrades are under 2%, and at the time, October was tracking at 1.6%, and that improvement has had a direct and significant financial impact. We have also cleared legacy inventory that was dragging on cash and profitability. When I arrived, there was more than 27,000 linear metres of seconds and obsolete carpet stock sitting in storage, incurring significant cost. Virtually all of that is now gone, freeing up space and reducing waste. None of this would have happened, would have been possible without the right people. We've rebuilt a capable and experienced team. Victor Tan, where are you, Victor? Victor's over there with his hand up. He's been reinstated as our Chief Financial Officer and Company Secretary, strengthening our financial discipline and governance and fully utilising Victor's 40-plus years with the business. Victor knows all parts of the business intimately and is a great sounding board for any new initiatives that we have, and he has always put the shareholders first. Warren Drinkwater, who put his hand up just over there, he's our General Manager of Sales for New Zealand. Warren brings more than 20 years of industry experience and has been instrumental in rebuilding our retailer confidence in New Zealand. Michael Ingham, who is unable to attend today, is our General Manager of Sales in Australia. He's been with Bremworth for over 14 years and again is instrumental in re-establishing our relationships with our key Australian buying partners. Chris Nabney, who again, he's away on leave. He's our head of our yarn operations, so he's across both Napier and Whanganui. He's been very key in driving our turnaround in quality and plant performance. Dave McLeod, again, who can't be here today, he's down in Napier at the moment, who has supported the people restructure, has been central to rebuilding staff levels at both spinning plants and managing change with professionalism and care. And Kaio Deal. Kaio, where are you? Put your hand up. Kaio is our Chief Information Officer, and he has been instrumental in upgrading and streamlining our systems to match market requirements and manufacturing objectives. It's a significantly big task, let me tell you. So our workforce understands the link between quality, efficiency and customer satisfaction. There is a renewed sense of pride in delivery and accountability for results. Our focus is now firmly on our customers. Bremworth has a proud heritage in wool carpet and that remains central to our brand. But to succeed, we must be cognizant of where the market is. Synthetic carpets account for more than 85% of soft floor coverings sold in Australasia. By reinstating solution-dyed nylon alongside wool, we're giving retailers a fuller range of what they need and putting ourselves back in the conversation. The re-entry into synthetics has been well received. It allows us to participate in more tenders and dealer promotional activities, while also positioning our wool carpets as the premium alternative with a comprehensive range. In Australia, our relationships with major buying groups are strengthening. We're getting back through the door and rebuilding trust, which is critical for long-term volume. Domestically, we are winning back floor space in key independent stores through improved service, reliable delivery and clearer brand communication. Looking ahead to the rest of FY26 and into FY27, I expect to see the full benefits of this reset reflected in our results. Some initiatives have taken longer than expected. Synthetic carpet production started 2 months later than we planned. Napier's second cairn is coming online, as Rod said. It'll actually be running on Monday, but again, it's later than scheduled. These are short-term issues, and by the second half of FY26, all our major changes will be in place. Our cost structure will be right-sized, and we expect to be back in profitability. Inventory is now balanced between fast and slow-moving products, and our cash generation is improving. Working capital is tightened, and manufacturing recovery is trending upwards. This gives the flexibility to respond quickly to demand and reinvest in areas that will drive growth. We're continuing to invest in product innovation that supports our long-term competitiveness. Our product strategy now balances New Zealand's natural wool advantage with selected synthetic offerings. Work is underway on new sustainable blends that enhance durability while maintaining the aesthetic and environmental values our brand is known for. Our design and technical teams are working more closely with customers to ensure our products align with the market. The time from concept to launch is shortening, allow us to refresh our ranges more frequently and remain competitive. So in short, we've moved from recovery to rebuild, as Rob mentioned before. Bremworth today is more efficient and more focused and better aligned with the market. We have the right leadership team, the right culture and the right strategy to deliver sustainable profitability. Whether under our current structure or as part of the proposed scheme, the direction is clear. We're building a business that can compete, grow and create value for shareholders over the long term. So thank you for your continued support and confidence in Bremworth. I'll hand the meeting now back to Rob.
Thanks, Craig. I'd now like to invite questions in relation to the FY25 annual report or today's presentations from what you've seen. There will be an opportunity to ask questions about the resolutions once they've been put to shareholders later on. As I mentioned earlier, so we'll keep the scheme of implementation questions until the next session, if that's okay. As I mentioned earlier, if you do have a question, please raise your hand so we can direct the microphone to you. And if you'd... Jesus. There's bugs. I've just taken the fruit fly population from Auckland down by one. As I mentioned earlier, please raise your hand if you have a question. We'll get the roving mics to you. And if you could identify yourself before putting your question, that would be great. And for shareholders online, if you can put your questions in, I see we've got a couple there. Do we have a question from the floor? We'll get the microphone to you, but Padgett, we might take one online.
Okay. We have Coralie Van Camp. As I'm unable to attend personally today, please confirm whether the offer of $1.05 per share is to sell Bremworth to Godfrey Hirst and ultimately foreign ownership. So that's from Coralie Van Camp. Please confirm whether the offer of $1.05 per share is to sell Bremworth to Godfrey Hirst and ultimately foreign ownership.
There is a range of value. I'm quite happy to deal with, well, it's stated publicly at the moment, so we can deal with it now. There is a range of $1.05 to $1.15. The price of the share that Godfrey Hirst will be paying is 75 cents under the proposed scheme of arrangement. There is a number of hurdles that have to be got through to get to that point, including a shareholder vote that you will all be invited to attend. The first cab off the rank is obviously Commerce Commission approval in New Zealand. We've already got the ACCC in Australia, and there'll be a number of other things that we'll talk about and I'll flesh out later on. At that point, you will have your choice to determine whether this happens or not. Under a scheme of implementation, we have a requirement to have 50% of the shares on offer voted, and in the process of that voting, 75% of shares voted need to be in favour of the resolution. So there's a lot of water to go under the bridge, but assuming shareholders say yes, the range of $1.05 to $1.15 is what we expect the combination of the purchase price and the cash distribution to be.
Great. There's one more online from Paul Grant. Is Bremworth on track for a positive net profit for the year ending June 26?
I can deal with that. Craig may want to do a little bit more later on, and it might be easier just to do it from the floor, from the desk, to be honest, rather than this shuffling around. The year, I mean, it's a challenging year. We're coming out of the recovery. There are green shoots, but make no mistake, there is a long way to go. We haven't provided the market with the reforecast yet. We will be looking closer to that at the 6-month mark, which will be early next year. We'll be bringing that out. At this stage, delays in solution dyed nylon as one of those legs has had an impact on us. But we expect, looking forward, that FY26 will be significantly better than FY25. But it's simply too early to tell. There's a hell of a lot of water to go under the bridge.
One more question from Paul. With such an excellent refocus, why not remain a Kiwi company? 75 cents per share paid by Mohawk seems too little.
Thanks, Paget. We might hold that question until later on when we talk about the scheme of arrangement. Are there any questions from the floor? Down over here. That fruit fly.
I was just wondering, do we know when is there a date for the Commerce Commission decision? Somehow in my head I've got December the 17th or something.
Yeah, 22nd, I think, is the one that's on the timetable. We'll have a timetable up when we do the scheme of arrangement discussion later on, so we'll be able to flesh it out then, but broadly your understanding is right. And that's this year, Christmas this year. And over here.
Catherine Harvey, shareholder. What makes this introduction of synthetics better than when it happened 8 or 9 years ago and it didn't seem to work?
Craig, would you like to talk about that?
Look, I'm not sure that they didn't work last time. I don't think that's quite right. What makes it different this time? Not a hell of a lot. It's just that we're getting back in it. We've spent a lot of time getting the colours right. We've been told we're a market leader in the colour work, and we need the synthetics in the marketplace to be relevant to our dealers and also recover factory overhead in the plant.
Yeah, I might just expand on that a little bit. As Craig mentioned in his report, when you've got 15% of your flooring soft covering universe being wool and 85% being synthetic in some description, the market is telling you where they're behaving. They may say what they like, but what they do is different sometimes. And by not having a synthetic range in our offer, it made it very hard, A, to get scale, and B, to be of relevance to the retailers. So we were effectively fighting with one arm tied behind our back. The reintroduction of synthetic gives us a bigger toolkit and portfolio to offer our retailers. It gets us more relevance, it gets us more space, and it gets us more consumers. So that's why we've done it. That in turn allows us to defray our fixed costs and our overheads within this business across a wider number of linear metres that we can produce, which means that we hopefully start to make a little bit more money.
How confident are you of getting this past the Commerce Commission? And secondly, how do you believe your mob is going to be any better than the last 20 years?
I guess shareholders will ultimately be the arbiter on that one. The Commerce Commission, and I'm quite happy to expand on this later on, the Commerce Commission process is a black box. We don't get to influence that. They ask us what's going on. They'll ask a number of participants in the sector their point of view, and from that they will make a decision. So we cannot lean on those scales. It is a completely independent process, and we are bound to abide by whatever that outcome is. So are we confident? Yeah, we wouldn't have gone into this if we didn't think there was a realistic chance of getting it through, but the Commerce Commission obviously make their own call, and that will come out this year. As to the other question about us in the 20 years, all I can say is we've come in here, all of the directors on the board, excuse me, all of the directors on the board have got turnaround experience in some form or another, and we're bringing that to bear here. I'll be the first to admit that if somebody puts a colour swatch in front of me, I'll probably give it to my wife, but we're not here for that at the moment. We're here to turn this business around. So we don't have a perfect skill set, but we have the skill set that's needed today, and we'll be reviewing that regularly as we go forward, if we do go forward. I mean, under the scheme of arrangement, it'll be a completely different operation. Any others online? All good, thanks, Paget. Okay, well, look, if there are no other questions from the floor, one last go around. Okay, what we might deal with now then is the resolutions, if that's the case. So we have 5 resolutions. They were notified in the notice of meeting, and the explanatory notes have been provided. Voting on each of the resolutions will be held by the way of poll, and that's underway as I said earlier. Only shareholders who have yet to vote proxy holders or representatives of corporate shareholders may vote on today's resolutions at the meeting. We will take questions on each of the resolutions as they are put to the shareholders. So the first 4 resolutions are with regard to the election of your directors. We have all 4 of the directors that are on the board. Myself, Julie, Trevor and Murray are up for election today. We were put in at the shareholders' requests in March this year, and it's time to formalise that. So the first resolution relates to the election of Julie Bonin as a director of the company. I'm just going to read Julie's bio quickly from the annual report. Julie is an experienced director and business advisor with expertise across agriculture, retail, health, leisure and corporate travel and wealth management sectors. We all joined the board in March 25. She chairs our audit committee. She is a fellow chartered accountant with a proven track record as both a chair and audit and risk chair. Julie has extensive experience in business restructuring, market disruption, M&A, stakeholder engagement, regulatory compliance and project governance. Her current board roles are with Farmlands Cooperative Society, where she chairs the Audit and Risk Committee, Forte Health Group, Reform Radiology and Moana Heights. Previously, she has held board positions with J. Ballantyne and was a chair there, and the House of Travel Group, where she was an executive director. Julie, would you like to say anything?
I think I should. Thanks, Rob. Good afternoon. It's been a real privilege to serve as a director of Bremworth over the last 8 months. It's been full on, but it's been definitely worth the effort. Working alongside my fellow directors and the new management team to stem the cash burn and to protect the integrity of this iconic company has been my focus from the outset, particularly in my role as Chair of Audit and Risk. There's still more work to do in improving the financial systems and our risk processes. And if re-elected, I'll continue to support our dedicated and experienced management and definitely experienced financial team to make changes in these areas. And I'll do that in a practical and efficient way, but I'll still maintain the highest levels of governance. So I look forward to serving you as shareholders if I am re-elected.
So I have the pleasure of moving that Julie Bonin, who retires and who is eligible for election, be elected as a director of the company. I advise that the directors unanimously support Julie's re-election. Are there any questions in relation to Julie's election today? If there are none, then if you haven't voted, vote now. Are there any questions online, Padgett? Okay, that's great. Thanks. We'll let you get on with the vote. And we'll move to Resolution 2, which is the election of Trevor Burt as a director of the company. I'm going to, again, read from the annual report, his bio. Appointed in March 25, Trevor has significant experience leading large and complex corporate organisations and a proven record of implementing change and achieving results. He's the chair of the People and Performance Committee here at Bremworth and a member of the Audit Committee. Trevor has held significant leadership roles in global industrial gas sector, in Australia, China, the USA and Germany. He currently sits on the boards of the New Zealand Land Company, where he chairs it, MG Limited or Market Gardeners Limited, Land Power New Zealand, New Zealand Drinks and Hossack Station. Previously, Trevor has been a board member of MHM Automation, where he chaired it, Naitahu Holdings Corporation, also chair, Littleton Port, also chair, PGG Wrightson's, deputy chair, and Silverfern Farms and Main Power New Zealand as a director. Trevor, would you like to say anything?
Kia ora tātou, nā mihi atu au kia koutou katoa. Thank you, Rob. Delighted to have served this last 7.5, 8 months with my colleagues. What are we going to be any different to the others before us? I think I've experienced a great team with Murray, Julie and Rob, and I think we work together really well as a board to complement each other. What do I bring? I'm the old scar. I've got scars on my back from a wide-ranging roles in governance across 20 years and across all sorts of ownerships, including, as you heard, publicly listed, private companies, even a bit of government, and more recently iwi. I'll bring you three things. One is those scars and experience. The second is a passion. You know, I'm passionate to work with these guys. It is part of why I joined here, was the opportunity to work with three individuals like this. And the third is I'll bring you a commitment to good governance and a commitment that will always act in the best interests of the company, but with a view that creates shareholder value. I believe you've had a tough time as a shareholder in Bremworth, and I want to see us as a board change that. So that's what we're here to do, is deliver value to you as shareholders. And I'd like to thank you for the opportunity.
Okay. I have the pleasure again of moving that Trevor Baird, who is retiring and is eligible for re-election, be elected as a director of the company. I advise that the directors unanimously support Trevor's re-election. Are there any questions from the floor? Any online? Thanks, Padgett. Okay. Could you please now vote in favour of... Could you please now vote on that resolution? All right, that brings us to resolution number 3, which is the election of Murray Dyer as a director of the company. Again, I'll read the bio. 2025, March. Murray is a member of the People and Performance Committee. He's 30 years experience in agribusiness, energy and international trade experience. Murray's career started in the wool industry with Reed Farmers. That's an Otago stock and station company that is no longer here. I'm not sure whose age you're showing there, Murray. Has included executive and director roles in textile trading and co-founding an energy and commodity services business in London. Got that sorted? Murray founded and was the managing director of Simply Energy. Murray is a shareholder and director of Utility Data Services and an investor in Agritech. He's a chartered member of the Institute of Directors, a graduate of the Kellogg Rural Leadership Program, and has completed an MIT Sloan Management Executive Program on AI. Murray, have you got anything you'd like to say?
Thanks, Rob. It's been a pleasure to such an amazing brand as Bremworth to be involved in it for the last 6 or 8 months. It's been very challenging, but it's been very rewarding with the changes we've made, and we've had to move fast. What I bring to the organisation, I've got an entrepreneurial background, so I've got a real sort of owner-operator mentality about where each dollar's spent, how it's spent, what the return is on that dollar. And then a real focus on commercial execution. It's one thing to align strategy, but you've got to execute commercially on that strategy. And that's what my real focus will be on a go-forward basis if I'm re-elected. So it's got a very proud history and brand, Bremworth, and we need to really convert that into sales and commercial execution, and that's going to be my focus if I get the opportunity to be re-elected. Thank you.
Thank you. I have pleasure again in moving that Murray Dyer, who retires and is eligible for re-election, be re-elected as a director of the company. And again, the directors unanimously support Murray's re-election. Are there any questions from the floor with regard to Murray's election? Nothing online? Okay, thank you. Can I ask you please to vote on that one now, please? Resolution number 4. I'm not sure whether we're saving dessert for last or not, but anyway, it's my turn. Rather than get out Trevor to read this, I'll read this. And I'm going to read it because I forget things. Again, March 2025, significant governance experience across agriculture, horticulture, export, supply chain logistics, renewable energy and retail. I currently chair Farmlands Cooperative Limited, Woolscour Holdings Limited or Woolworks, Hilton Haulage, Fern Energy, Pioneer Energy, AgriZero New Zealand and Rewiring Aotearoa. I am the immediate past chair of Silverfern Farms Limited and Silverfern Farms Cooperative, a former councillor of Lincoln University and a past chair of Wool Impact. I was awarded the Deloitte Top 200 Chair of the Year in 2023 and in 2019 received the Cooperative Business New Zealand Outstanding Contribution Award. I happen to also be a sheep and beef farmer from South Otago, farming 10,000 stock units on a carbon positive, just over 1,000 hectare medium hill country farm down there. And so the wool supply chain is important to me personally. I am a Chartered Fellow of the Institute of Directors and an alumni of Lincoln University, a Masters in Commerce and a BCom Ag in Economics. I am very happy to put myself forward for your consideration as being re-elected to this board. As I said, I am a sheep and beef farmer. The wool supply chain is absolutely fundamental to me at many levels. My father shore his way onto the farm back in 1964, so this is intergenerational for me. But where the real attraction about Bremworth is that this is where the value is created. When you look at the whole supply chain, it is here where the money happens. And this business needs to be strong. We've got a great brand. It needs to turn around. And I've got experience in that space. I've done it with Silver Fern Farms, and we've done it, Julie, with Farmlands, and I'm looking forward to be able to continue to do that here. So I respectfully request your support. Trevor, do you want to take it from there?
I don't know, you pretty well took it, Rob, actually. I reckon he was scared that we'd swap seats in case he didn't get it back, so I'll do this from here. I've got great pleasure in moving that Rob is re-elected. He retires by rotation, and he's obviously eligible to be a director of the company. I advise that we as a board unanimously support Rob's appointment, and I'd like to add that as chair, Rob's led the board fantastically. He leads by example. He's up front, he's smart, but he's got a very good way about him. And as he outlined, he's got a very great passion for this sector and an experience in it. He continues to be driving force for growth, and his leading of the transformation at Bremworth has been exemplary for us. And I think the board and the management are extremely grateful, Rob, that we've got you. I'm happy to take any questions about Rob's election. Paget, any online? No. Okay. We'll pause and let you vote. Sorry, we do have one question. Fantastic. Good. Save for Rob, the chair.
My name is Haley Ching. I'm a shareholder of Bremworth recently after reading some financial news. And I don't have question, but I'd like to thank Rob very, very much because I was a shareholder of Feltus Carpet, which went liquidated years ago, and I lost money. And now we are lucky to have Rob as a very capable chairman so that I can get my money back. Thank you so much.
Well, thank you for your comments on behalf of Rob.
And also another one is I am what should I say, supporter of the wool carpet. The house I built, I use Feltus carpet, and I use wool as insulation. So during those 25 years, I never need to use a heater at home at all. I only need to wear more clothes when I go out of the house. When I go inside, I have to, so warm, I have to take off layer by layer my scarf, etc. And also, I think Fletcher Building have made a mistake because they use paper for insulation as the roof. It's the cheapest one. I got the sample 25 years ago, but I didn't use that. Paper is so easily ignitable. So they make a mistake of using paper as insulation just to save money. But then so it burns so quickly. And it's a disaster. If they use wool, because wool won't be ignited so easily, it will be another story. Yeah, thank you very, very much. Yeah, thank you.
So, Rob, I'll ask everybody to complete voting on your appointment if we can, and then I suppose I have to hand this back to you, but, you reluctantly take it. Thank you.
Thanks, TV. Excuse me, you might have the talking stick just yet, that bloody fruit fly is still going. The fifth resolution that we are to deal with today is to fix the auditor's remuneration. We are asking your authorisation to do exactly that. So I move that the directors be authorised to fix the remuneration of the auditor. Are there any matters for discussion or questions from the shareholder on this resolution? From the floor first. Paget? Okay, thank you. No further questions, then can I please ask you to vote on that resolution? So that concludes the voting on the 5 resolutions that we had in front of us today. I will declare the voting closed shortly. For those of you who are yet to cast your vote on all resolutions, I will now pause to allow you time to finalise those, and the boxes are coming around now. If you have paper to put in, please. No, this bloody thing's just deciding to live in my mouth. I'm positive. There's one down the front here. Oh, sorry, I thought there was a... Just in time, got it sorted. Excellent. Okay, thank you. Looks like we've gathered all the votes. If you haven't done it online, 3, 2, 1. Now it's closed. Thank you. The voting on today's resolution is closed. The results will be released to NZX later today and will be available on the company's Investor Centre website later on today. Computershare, who will act as scrutineers, will now, we've done that, collect the voting forms. So that's all happened. All right. Proxies and postal votes. For information, the company had received approximately 20 million proxy and postal votes, representing approximately 28% of the total amount of shares, and of that, more than 90% of those have been voted in favour of the 5 resolutions. So now we'll move on to other business, and if there are no further questions, we'll close the meeting. But here's the last chance for any questions with regard to the AGM for Bremworth for 2025 financial year. Any questions from the floor? Paget, anything online?
Is this on?
Yep.
One question online about the wool-only strategy. It's from Paul Grant again. Was the wool-only concept adopted by previous board and management unrealistic, or was it poor execution?
I was looking at you. Look, a combination of both, to be quite honest, Paul. I'll just state again what I said earlier. 15% of the soft floor coverings in that universe, we are making it hard for ourselves. It's certainly aspirational, and there is no question that there is a segment of consumers out there, much like you, who love wool and will do anything you can do to have wool in your life. And go on, do as much of it as you can. I do the same. But unfortunately, the reality is there is a large chunk of consumers who some of them may say that, but do something else, and some may not say it and don't do it either. And we're missing out on that opportunity. So the wool strategy was aspirational, and to make it work, it needed a fair wind, a very fair wind. We did not get a fair wind, particularly with Cyclone Gabrielle. And that meant that we had to go and source wool or yarn from offshore. The yarn manufacturers do not make yarn to the same standards that we do. I have been amazed coming into this business at how technically complex making wool yarn is. It is not something to be trifled with, and Grant has got many, many decades of experience around this. He can tell you for probably longer than you're comfortable how hard it is to do. The point is, when you've got long supply lines with varying quality that you don't find out about until it's here in New Zealand, being tufted into a carpet out there, we have manufacturing problems, we have cost problems, we have inventory hold problems. those headwinds stood against us for the last 3 to 4 years. So the strategy is aspirational. We still want to do it as part of a portfolio of products. Wool is a key part of what we do and will continue to be a key part of what we do, but it's not going to be all that we do. We can't afford to occupy that rear area only. Any further questions? Got a microphone?
Yeah, thanks, Rob. A shareholder. What if the market really bounce back and like the synthetic is much better, well received than you anticipated, and you end up with more cash than you expected? So will Mohawk pay more, or you will distribute more cash to the shareholder? Will shareholder be able to have this the possibility of the cash better than the 1.15? So if something better happen.
The short answer is yes, that would be the case, but there's a fair bit of water to go under that bridge, and this year so far would not evidence that that's happening. We haven't helped ourselves, to be quite honest, by having a delay in our synthetic product launch by a couple of months. So that's put us under pressure with the rest of the business to perform. But yes, if we had an absolute blinder in the back half of the year and there was more cash to distribute, we would be distributing more cash. It's not what we see in front of us at the moment, but I'd be delighted if that was the case.
Thank you, Rob.
Question over here.
Steve Stickley, and I'm also a shareholder. I'm interested, when you're talking about solution dyed nylon, does that run on the existing machinery that wool carpet is made on?
Craig, do you want to deal with it?
Yep, it does. It basically just comes straight in and goes straight onto the tufter. There's no real difference at all in regards to what we do. We still run it through our beaming machines and then put it out on our tufters. A little bit harder on gauge parts and bits and pieces, but it runs exactly the same. There's no need for capital investment or anything like that. So.
Jason, will we see on the plant tour this afternoon, is there SDN being manufactured this afternoon?
Absolutely.
You'll see both going.
And so where does that yarn come from?
Look, at the moment we're bringing it in from China. There's quite a few options of where we can get it from. It's sourced all around the world. And at the moment we're buying some from China, but I've just been in India negotiating with suppliers up there. It's horses for courses, it really is. Who can best match our shades and do the best pricing, offer best terms, etc., etc. So it really is horses for courses. Our first round is coming from China. Our second round may come from Indonesia. It may come from India. It may come from China. I don't really know yet. So.
Can I make a comment? So thank you. This looks really encouraging.
Thank you. I mean, it's a means to support the business. We've just got to do it. Now, personally, I have my views about it, but of course I do. I'm a bloody sheep farmer. But yeah, look, we've got to. If the market is telling us to do something, we should listen to it. Are there any further questions from the floor? Anything online, Padgett?
There's two of them. I was here, but we'll save it.
Save it for later. Yep, thank you. Okay, well, look, with that, thank you very much for your attendance in the 2025 AGM. I'm going to draw that to a close. I'd like to thank you for your continued support, and I want to reiterate that we are excited about what Bremworth is doing, and I think we've just exposed a little nugget of that here. We look forward to adding value to our shareholders and our staff and our consumers. So I'm going to call the AGM to a close now. As I advised at the outset, all non-shareholders, whether in person or online, we ask that you now leave the meeting to allow directors time with the shareholders only to address any other questions that you may have on the proposed scheme of arrangement. Thank you. Yes. And I'd just like to flag also that we need to have a hard finish at 2:40 p.m. this afternoon. So I think the parking meters run out about that time too. So thank you all for your interest in Bremworth and taking time to join us this afternoon. Let's take a break for 90 seconds to allow those that need to leave, and then we'll reconvene to have a discussion about the SAO.
Question.
Good job. All right, thank you, everybody. And thank you for just bearing with us while we change hats. So what I'd like to do now is, essentially this is an ask and answer session. Thank you. So what I would like to do, excuse me, is briefly talk to you about, just to give you a quick overview, a recap if you like, of the scheme of arrangement and what it is. We'll move on to the value very quickly. It's a range at the moment. We want to talk about the timeline and then why. Well, basically open the floor to questions for you. So, as you can see, next page, please. Thank you. So we undertook the initial scheme. The initial strategic review was initiated by the previous board, and that was with regard to the Cyclone Gabrielle payout, and there were some unsolicited advances to Bremworth from other parties expressing an interest in the company. So the process has been seriously underway since March. Well, that was when we came in and took it on. Toby had been involved prior to that. And this was effectively a global trawl. I just want to give you some sense of the size of this, how many parties were engaged and where we got to with where we are today. There were 40 approaches globally to various parties, not only within New Zealand but externally. From that initial trawl, 6 non-disclosure agreements were signed, which basically says these are parties that are serious about wanting to deal with us further. They get the information. From that, 5 information memorandums were sent out, and from then the detailed due diligence process with the data room and the Q&A started. And that's where we ended up in October this year, where we went out to the market. The board unanimously recommends that of all of those options that we have looked at, some fell along the wayside, many fell along the wayside, but the one that Mohawk, Godfrey Hirst, Floorscape, pick your name, it's all the same thing. The one that they put forward is what the board considers to be in the shareholders' best interests of all the options that we've seen to date. So that is why we are where we are. The process is going to be through a scheme of arrangement, so it is not a done deal. There are a number of thanks, Craig. There are a number of hurdles that either have been jumped or are about to be jumped or still need to be jumped to get to a successful conclusion, and I mentioned a few of those earlier. So the first one that came off was the ACCC approval in Australia, which was relatively straightforward. That was achieved about 3 or 4 weeks ago after a pretty quick process. Over there, Bremworth is a brand. We are not a manufacturer in the Australian context. It was relatively simple for the ACCC to say yes. In New Zealand, it's a different story, and the Commerce Commission here does have significant interest in this around competitive pressure and alternatives, so they are doing their process right now, and they will conclude somewhere around Christmas this year and give us, but it is, from our point of view, a black box process. They can interview who they like. Indeed, people are submitting opinions to them as well, and that process will be gone through. If that process results in a successful outcome, the next step along the way is for an independent valuation of the offer to be made, and we have engaged Grant Samuel to do that. That report will be coming out to you later on next year, probably about March, and that will come out with the voting pack. The last step in the chain is for you as shareholders to have your say. And as I said earlier today, under the scheme of arrangement rules, that requires a 50% share vote, and of that 50%, 75 need to be in favour. So we have a timeline that I'd like to share with you in a minute, but I want to make the point, this is an ongoing process. We will be engaging with you along the way when we have tangible outcomes to talk to you about. The first one in that process is the Commerce Commission's approval. If the Commerce Commission says no, that's it. We're looking for alternatives. So there are a number of hurdles, and the success of a few of them will determine whether we continue down this path or not. Can we have the timeline? Who's running the butter? Thank you. I should have mentioned also there's some taxation advice that we're looking to receive. We've engaged KPMG on that as well. That is about how do we handle the cash distribution to you as shareholders. I want to make it quite clear, and we need to make it quite clear. In fact, Padgett, if you can go back to the previous slide, I should have talked about this then. There are two clear components to this, and you need to understand them collectively and individually. So the 75 cents is the value that Floorscape are putting on Bremworth for the business. The 30 to 40 cents in the black box on top of that is the surplus cash that we have within the business today that we wish to distribute to shareholders. That is not going to go to Godfrey Hirst. That will come to you and will happen virtually at the same time, slightly ahead, but basically at the same time as the transaction if the scheme of arrangement is implemented. So the key milestones, Commerce Commission this year. Assuming that happens, there will be the independent valuation report, the voting papers, the shareholder vote, which is probably going to be in March. I'm jumping around the timetable. And if that happens, then effectively it's on and the money will get distributed. So that's...
Rob, can I just jump in
Yep.
with a couple of minor clarifications before Ian tells me? We also have to get a clearance from the Takeovers Panel, which is a non-objection more than an approval, but we have to get formal approval from the High Court, and that is why this process is such a protracted and longer process. The High Court approval is the key one. Non-lawyer, I'd describe it as a formality. Ian might describe it as something different, but it is a key step in that, and it would not happen if the High Court didn't approve it. I don't know of an example where the High Court's ever turned one down. Just that I clarify that. Sorry, Rob.
No, thank you. That's all I have to say at the moment about the process and the timeline, unless there are more questions about it. I really want to give shareholders the opportunity now to ask your questions, and we did have a couple earlier online. While the microphone is going around on the floor, if you like, we can... Padgett, have you got one of those questions?
Yep, so I've got two from Paul Grant. The first one.
Yep.
If the sale to Mohawk is blocked by government or shareholders, will the now current directors continue to serve Bremworth?
Look, we're going to have to consider the options in front of the company at that stage. Where do we take this? So if the Commerce Commission does turn this down, the issues around how do we recapitalise this business and take it forward, what do we focus on, what does that mean, will need to be traversed. Is there an alternative ownership position? There's a lot of water to go under that bridge. We're not going to leave it in the lurch. We're here to represent your interests, but I think it's going to open up a number of other questions that will need to be answered. And fundamentally, that is what's the best direction forward, because what we've got right now is not sustainable.
Second question from Paul. You seem willing to sell Bremworth at the low point of the building cycle, and with your collective skills, selling Bremworth in a couple of years could get a much better price. Yeah. Let's just look back to look forwards. So we've made 2 years of losses to the tune of around about $12 to $15 million a year for the last 2 years. And this year started out reasonably tough. If we break even this year, that'll be a good start. And that's probably aspirational where we're sitting right now. When you've got $42 million in the bank as of 30 June, it doesn't take too many years, like the last 2 years, to turn that into zero. That money is going to be needed if we are going it alone to reinvest in this business. There has been a large number of years of deferred maintenance, lack of capital spending, and we need to address that. That assumes also that we have fair sailing ahead of us. That assumes that our competitors let us have a go. I wouldn't assume that at all. The environment out there is only going to get choppier because our competitors are facing into exactly the same market that we are with better balance sheets. And we need to be cognizant of that. One of them, if the scheme of arrangement does not go through, will know quite a lot about us.
There are others that are circling. Solution-dyed nylon and other synthetics are in the market and are continuing to come into the market. So to think that we've got a pathway forward that is going to be relatively smooth sailing, I think would be quite optimistic. So what I'm saying is, if we continue to make losses, even if we break even, we have a significant reinvestment program in this business, and that combined with choppy water makes it a bloody hard ask. And that's really the recognition that we've come to as a board, is why the scheme of arrangement we are recommending to you as being in the best interest of the shareholders and the company. Because it allows Bremworth to continue to manufacture in New Zealand, the brand to continue, and the opportunities to be unlocked, and for shareholders to get a return. Otherwise, we're asking you to double down for quite a long period of time with no clarity about certainty, no clarity of outcome. And it could end up being worse because we don't have cash to distribute. We've burned it running this business.
A question from Diane Williams. So she was asking for clarification on the takeovers panel that Trevor talked to. And could we just talk into the microphone so everyone online can hear?
Turn it on.
I'm no lawyer here, okay. But the takeovers panel are there, I suppose, I'll take my licence here, Ian, to ensure that we follow a proper process as a board and to ensure that we're doing the right things for you as shareholders. And so they are there to oversee that process, and they would give a letter of no objection basically to the court. And that's a key element in the court's consideration, because then it gives the High Court the assurance that we've done this properly. Was that crudely it, Ian? So I say it's a given. I think it's a given because we have followed a really robust and good process. We've had very good financial advice and corporate finance advice and very good legal advice. So we're well positioned with that. And then the High Court will consider it based on that. I hope that answers it.
That's everything online.
We have a question down here.
It does not appear that you have a timeline there, is it correct? You have a schedule, but not a timeline.
I thought that had dates on it, actually.
No, there's no date.
Okay. Well,
And
then...
secondly?
Yeah.
Secondly, from what you're saying, it appears that if the takeover is not going to happen, for some reason or another, for one reason or another, most probably there will be a capital raise, is it correct?
Look, it'll be one of the options that we have to consider at the time, if that is indeed what's in front of us. So at the moment, we are in a scheme of arrangement process. The board has unanimously backed that. There are a number of activities that need to happen in that process to allow it to come to a conclusion. If it derails for any reason, then we will have to consider our options that are in front of us at that time. But right now, we are recommending this to you as a board, that this is in the best interest of the company and the shareholders. Until it isn't, because we can't go forward, or another superior offer comes in over the top that we cannot go and solicit, the board is bound to work with Floorscape on presenting this to shareholders for consideration. But that doesn't stop somebody coming in and giving us an offer. Then we will consider that as well, but it has to be superior to the current offer that's on the table. So we will deal with it depending on whether we need to deal with it.
Rob, Steve is my name. There is a contradiction I see, because in the meeting we had just a few minutes ago, you, the directors, Craig, spoke very positively about what is happening in the company and as we look forward. Yet a couple of minutes ago, you gave us a very pessimistic view. How come? You know, on one hand you're saying this, and then on the other hand you're saying that. So it's confusing.
Yeah. I guess what we were doing in the 25 is we were looking backwards to look forwards. We weren't looking forwards at that stage. It was basically comparing our performance last year with what had gone on previously. And there's no question the performance of the business has improved. Has it improved enough? Not yet. That's the issue that we're facing into at the moment. And quite frankly, as I've said now, the choppy waters that we are facing into and the uncertainty around that, with this offer that is here, we are recommending the offer to shareholders and going through that process because we do believe it's in the best interest of the company. If that does not come off, we will have to reassess our situation. But yeah, let's be clear, the business is performing better, but it's not performing well enough. And the question really becomes then, well, how do we get the scale to be competitive, to perform at the level that we need? And, you don't have to be too much of a financial analyst to work out that we probably need to have an EBITDA number approaching $10 million a year, and we're a long way from that at the moment, to then get a share value of around about $1 a share, very roughly. And we're there at the moment with what's being proposed in front of us when you put the two quantums together. To get to that point, if we had a fair sale and commitment from the shareholders, it might take us anywhere between, who knows, 5 to 10 years to get to that point, assuming a fair wind. And it's the classic case of a bird in the hand versus the promise. And that's why we're recommending it today, because we have a bird in the hand.
So you are more pessimistic than optimistic about the business?
No, we're realistic. It is going to be a hard push and uncertain. And that's the issue.
Just one other question. Why wait to have the shareholder meeting? Why don't we have the shareholder meeting as soon as possible? There's nothing stopping us having that. Why wait until the first or second quarter of next year?
Yeah, there's a number of regulatory issues that need to be dealt with, as we talked about earlier, and they take time. And putting the regulatory issues, Commerce Commission approvals, the taxation advice, that sort of stuff, that will happen. Grant Samuels need to produce their report, and that's solely to provide shareholders with independent evidence that what is being offered is absolutely reasonable. We've had indications from them verbally that the offer is in the range of what they expect the company to be worth. They are working through that process of validation at the moment. So we're reassured that we're in the ballpark, more than in the ballpark, we're quite close. That is something that shareholders should be comforted by because we aren't being fleeced. That process does take time, and then you go through it. So Christmas and New Year get in the road. Realistically, after the Commerce Commission advice, if it does come out the last week before Christmas, we're not really going to be, advisors bugger off and go to the beach houses. We're not going to be doing anything until February, and then it's a couple of months to the run into the end. So it's moving probably as fast as it can, I think. We'd love it to be quicker. It'd be great. We'll come down next, this one over the back.
Rob, sitting here, I get more the impression that you're really trying to create brokering the sale of the shop more than anything else, both you and the board.
Well, of the options that are in front of us at the moment, yeah, look, I guess you can put that spin on it. It is effectively. Godfrey, Floorscape have come up with the offer out of 40 participants around the globe that were canvassed for interest, and we think when you balance everything up, it is in the best interest of the company and the shareholders to take the offer that's on the table at the moment. The interesting thing for shareholders, I expect, will be what happens if another offer comes in over the top, unsolicited, or the Commerce Commission says no, or shareholders say no. Where does that leave us? So it's not a done deal, and you'll have the final choice in all of that. But clearly right now the board is recommending to you that this is what out of the portfolio of options we have in front of us, this is clearly the best one. So we're putting it to you as shareholders for consideration. There was a question down the front here, Paget.
Yes, Steve Stickland, I'm a shareholder. How much cash could you burn through getting all these approvals and Commerce Commission and legal advice?
You got those numbers? Well, it's not insignificant. I mean, Toby drives a nice car. Sorry, I'm being flippant. I shouldn't be. I mean, we're paying for advice. So we've got legal fees, we've got taxation advice, we've got corporate financial advice. We're through the rump of most of that now, but there will still be spend going on. There'll be conclusion fees as well. Add all of that up, it's around about 3, I think, in total. 3 million.
And has the conglomerate that's buying it, have they put up like a non-refundable deposit?
No, it's all conditional upon the scheme of arrangement being implemented. They'll have their own costs, of course, because they'll have their due diligence on their side that they're doing, that we're not paying for either. So we've both got costs.
And is the offer unconditional?
If the scheme of arrangement is agreed to, yes.
So they're committed on their side,
yes,
like legally.
Yes, as long as we, there's a few thresholds. Yes.
I'm talking about their half of it.
Yeah.
There's a lot of stuff that the company's got to do to get the necessary approvals, but right. Okay.
To clarify that, there is a break fee in the agreement, so that if for an untoward reason they break out of it, there is a fee that they would have to pay us, and there's certain conditions, etc., around that. So don't call it a deposit, but there is a connection there that says you just can't come in, look at this business, and then go, oh no,
right.
I've now had a chance.
Some way to covering the costs that
it would go some way to it, yeah.
They're here because they want to be here. How are you looking online, Padgett?
My name's Peter Rowe, shareholder. If this scheme arrangement is completed, the role of you directors is what?
Fish and chip paper.
Yesterday's news.
Yeah, we're out of here. There's no... we will not be required once the deal is done, and the business will be part of the Godfrey Hirst or Mohawk Floorscape portfolio. What I can't recall, just offhand, is the date. So when the shareholder vote happens, what time frame have we got after that to implementation?
About a couple of weeks, okay, at most, and then that's completion date, and you get your money then.
So effectively, you do yourself up a job.
Yeah,
we do. I mean,
in a good way.
In a good way, and that realistically, we have the most to lose because we lose our roles. But that is not what drives us, whether we keep our role or not. What we all sign up for is, can we deliver you shareholder value? That's the role of what we do. That's what we're professionals at. So
that was really what I was coming back to. Someone else just asked. You seem to be saying you were very, very positive about why you were on this board. It's always you can see, this is enthusiastic, this is going somewhere, and all of a sudden the next thing is boom. We now feel that probably, even though that's what we want to achieve, that it's not really going to be a success for the company in the shortest time frame. If we want to succeed, it's probably going to wait, say, 5 or 10 years, assuming the market is our way.
Look, you've summed it up pretty much exactly. What we're trading off is certainty and return versus long grind and uncertainty. And uncertainty on a number of levels, not just what happens in the marketplace, but uncertainty around, is this business going to be fundable going forward? What do we need to put in terms of capital? What does that mean for shareholder returns in the short term and over the long term? So that's the trade-off. And I'll just reiterate it. Why we are here today recommending it to shareholders is because we do think it's in the best interest of shareholders. Does that mean that there are not alternatives? Of course there are alternatives, but none of them are as palatable as what we're looking at here. We're looking at both. If we have to go this alone, then we'll be doubling down on it. But we are putting an offer to you that we think is in your interest.
Rob, one of the things that we need to do is get the business into a shape where there was another path. We didn't want to have a fire sale situation, which was where it was heading. The cash burn was quite material, and the risk was, from a shareholder perspective, you were sitting there with no options on the table. It was a fire sale. What we've tried to do is execute really quickly to get a turnaround strategy in place, which is what we spoke enthusiastically about, but we're also being very realistic that get this to a level of profitability that can provide you with $1.10 or thereabouts a share in return. We're going to have to get a hell of a lot more wins. So it's about what have you got now versus the uncertainty of what we would need to deliver in the future.
That's very good. I must appreciate that you sound a lot more positive than the comments we got from previous annual meetings.
I can't comment on those. I didn't turn up to them, but look, there aren't that many options in front of us, to be quite candid. You know, we've traversed what we have got available, and yeah, it's driving an outcome. Steve.
Yeah, Steve Stickland here again. So I've listened to Warren Buffett's talking and advice and that, and he talks about a leaky boat. And so really you are dealing with a leaky boat, and what you're saying is that we're better off selling the leaky boat to a bigger organisation that has the capital to really rev it up themselves, and we take the money and do other things, maybe invest in their business as an option or whatever. But yeah, is that what you're saying?
Yeah, effectively, yeah. And just understand the counterfactual consequences. You know,
yes, the downside is that we'll get nothing, because once that $40 million is burnt up, you'll have to recapitalise to keep it going.
Yep.
Yep.
One over the back here, Kerry.
My name's Peter Beasley, a shareholder for a long time. The question I noticed in the annual report that none of the directors have any shareholding in the company. So there's nothing in this as far as any return of an investment that you may have made, or you don't have any opportunities to make it from now on anyway. But no, that's... I'm just wondering whether there's proxies involved, or so.
No, I mean no. None of us have an interest in the company. There is no incentive there to drive a particular outcome.
Question. That's all I want to know.
I mean, the closest conflict in that regard is probably me as a sheep farmer, and I can tell you that none of my wool goes into Elco, because I farm in the South Island and Elco sources out of Wanganui. So I don't even have that opportunity. So yeah, there is no benefit for a positive outcome or a negative outcome here for a director on the company. We're here in your interest, and we knew that when we were signing up for this. So that's not a drama. Okay, I'm mindful of time. We've got about 8 minutes left until we do have to draw this to a close. Very happy to continue to take questions, so if there are some, that's fine. We do have, could I just have a show of hands actually, who is interested in a plant tour, going around having a look? Okay, that looks like at least one party, 2 parties. Jason, you can go and organise the high-vis vests. It is a working environment out there. You got a question, Steve? No. Go and have a look. I think you should. You're the owners of the business, and if you've never been in a... Look, I love this sort of stuff anyway, it's like Meccano sets and boys going and doing stuff in toy boxes. But it is fascinating. The complexity about how a product like this comes together is something that is very easy to underestimate until you see it in action. So, and what Jason's dealing with out there in the manufacturing process, actually the yarn's already been made. So you go to the yarn plant in Napier and chase a piece of wool through. If you imagine a room half as big as a rugby paddock with strings of spaghetti going from one end to the other as it gets wound onto a bobbin, you've sort of got an idea. There's a huge amount of complexity in just corralling the gear, let alone manufacturing it. So please go and enjoy your time out there today. I know the team is going to be very proud to show you what's going on, and Grant Beale will be a font of all sorts of knowledge because he probably made half the machines. And there is a cup of tea out the back with some sandwiches. That's on right now. So are there any further questions on the SIA? Nothing online, Padgett? Oh, there's one over the back here. Just the microphone's just coming.
Hi, Philip Leyland, shareholder and ex-employee. With the inquiries that you got back, apart from Hearst, were any of them some sort of a slight chance of doing a deal?
Not really, or they'd be here. There was certainly interest, but it fell off.
And who was the most significant?
The process is confidential. We can't go and name names, but there was interest from multiple parties. But at the end of the day, the deal that we're putting in front of you today is the one that we're recommending as being in the best interest of shareholders. So I won't go into the detail of who the other bidders were, but there was certainly more than one. Okay, Steve.
I'm just looking here at the ownership on Simply Wall Street, and the institutions have 1.77% ownership of this company. So individual shareholders 22% and the general public 62%. And so this is not a normal company on the stock exchange, is it? No, I wonder how many people have James Cornell Securities Research document that they get subscribed to, like I do, and because he's recommended this company for years. Yeah, just a comment. I appreciate you guys coming on board. Thank you.
Thanks, Steve. Thank you. Okay. Well, look, if there are no further questions, thank you for coming to your AGM. We appreciate your support. We appreciate the time that you've taken out of your day to do this. Go and have something to eat and drink, and for those of you who can, put the high-vis on and go and have a look around. I'm sure you'll enjoy it. So we'll pull this to a close and wish you all the best. Closed-in shoes. Sorry. Have you all got closed-in shoes? Those of you who want to go around the plant. Sorry, if you don't, you can't. Okay, we'll leave it there. Thanks very much for coming. Cheers.